Welcome to the Successfully Unemployed Show. My name is Dustin Heiner, and I'm here to help you learn how to quit that JOB, that just over broke job, by investing, by having side hustles, by being an entrepreneur in literally every single way possible. And a great way is actually investing in real estate, doing lots and lots of different things in real estate. And I have Lane Kawaoka on here with me showing us how to invest in real estate and how to become successfully unemployed just like he is. Lane, thanks for coming on the show, man.
Hey, thanks for having me, Dustin. Aloha, everybody.
You obviously invest in real estate, but what is it that really propelled you to be able to be successfully unemployed, to be able to provide for yourself and your family without working for somebody else in that job?
Yeah, I kind of grew up in a very frugal family. They told me to go to school, study hard, be a good little boy, and invest in your 401k. I eventually became an engineer because maybe I was good at math and science when I was 8 or 9. So, I call this the linear path that a lot of working professionals are on, that we just kind of just like mindlessly kind of follow it. Um, but then, started working, and I was a construction supervisor, and it's not fun, especially when you're the new guy. You're out there on the road all the time, working with union workers, double, triple your age, some of them, and it's just not a good work environment. That was kind of like what built up the why to like why I need to get rid of this job, fire the boss, and but and for me, passive real estate investing was a thing that needs to get out of the rat race.
Yeah, I personally love long-term rental properties because it's consistent. I know that before I buy a house that I can actually make money every single month because I calculate all the expenses. Those are relatively fixed, and then I know how much I could rent it for because I have the experts in the area actually tell me what it could rent for. And then that difference is the passive income. So I 100% believe and right on with you. So from you getting into real estate, what made you take that leap? Like to actually eventually quit your job? Did you just have enough properties? Did you say, you know what, I'm just tired of working for somebody else? Like, what made you get into that where I'm saying I'm done and I'm going to be on my own?
Yeah, it took me a while, and I was, working my day job, and the day job got easier because I would find easier jobs, more cruise jobs to work at. But eventually, I got to a point where I started to, do larger deals, be bringing in investors, and kind of just to be responsible about it. I thought it was made more sense to just quit my day job, even though I was, could do it on the side, and you know, then take my side gig kind of to the next level, right? And be a true professional. A true professional, somebody spends all their time on kind of building their business.
So is it more, I guess, single family homes, fourplexes, even apartment complexes, or the combination of all of them?
Yeah, when I started out, building my portfolio, from 0 to 11 rental units, my first 5 years, it was single family home rentals. Bought a lot of those turnkey rentals myself. But today we buy apartment complexes, 100 to 300 units. We bring in investors, and we take the whole complex down, do a little bit of value add, and it's kind of a passive hold strategy.
So that's the term is syndication, and so you basically do you find the properties? Are you the more the active investor doing all the work, and then you get passive investors that would actually invest money with you?
That's correct. I'm the general partner. I'm the person who puts the debt in my name, operates it with my partner, and then we go out and you know do everything for passive investors, right? Who just want to diversify over many different projects. They want the no liability, don't want debt in their name, but they want to be able to do value add real estate, right, without all the headaches of the management.
So it seems like the type of people that you would be reaching out to have become a passive investor, they're going to have a little bit of money. Not saying they necessarily need to be doctors or engineers or something, but they need to have money to be able to invest. Now, if somebody wanted to start investing in a syndication or apartment complexes with you, what are the first steps that they need to do to be able, because there's two different obviously sides to it. One is the investor, which I want to tackle right now. But then the other one is being the general partner, where you're actually doing, finding the properties, running it, and doing all that sort of stuff. Let's look at the passive investor side right now. What would they need to do? Is it basically just have cash and be able to give it to you? Is that literally all they need to do?
Yeah, basically, especially if you're an accredited investor, we also do take in non-accredited investors, but you need to have a pre-existing relationship and be sophisticated. But yeah, it's very simple. But I would probably urge them to first get educated. Got a lot of free resources on my website, simplepassivecashflow.com/syndication. We got some e-courses. But mainly, like what you're trying to do is you build up your network with other pure passive investors, and that's kind of what I've kind of created is this family office, Ohana Mastermind, because you want to figure out, well, who do I invest with, and who, more importantly, who do I stay away from, right? Because anybody can do a syndication deal, put it together, but like there's so many charlatans out there, right? Like who do you trust? And this is what makes it difficult, potentially why the returns are so good. It's like, well, there's no directory for this stuff. It's all through personal relationships. After all, these are all the country club deals. They're called private placements for a reason.
What do you mean private placements? I don't know what that means.
So that's just a term. It is like, syndication is the term for, pulling money together, but legally how it's brought together is through this private placement memorandum. It's registered with the SEC. It's a private offering going out to private individuals who sign up and buy a portion of the equity of the company. The company could, they could be doing all kinds of real estate. It could be non-real estate, right? Syndication is just the mode of pulling investor capital together, just like it was a tech startup or a real estate development or a buy and hold 200-unit apartment complex.
So the investor, the passive investor, would put money into a pool of everybody else, and then you get a portion of that equity, and then they do get like quarterly distributions, and do they still get their own equity in the property that when it sells? What is the benefits of actually being a passive investor?
Yeah, I mean, the cons, of course, are like you give up control, which some people love that. They don't want to, they know that they're going to screw it up themselves. They're not professionals. They're like a doctor, a dentist. Their highest and best use is somewhere else, or if there's a successful business entrepreneur. But the pros of going into one of these deals is now you get diversification. You can diversify over different deals, different asset classes, apartments, self-storage, home parks, just to name a few, different geographic areas. I like Phoenix, Texas, Alabama, Florida, Georgia. I think it's wise to diversify over, several markets. And like, this is how I discovered how the wealthy invest. After I had been investing from 2009 to 2015, I had 11 rental properties, which is a great way for people to get started. If your guys' net worth under $250,000, you got to buy rental properties one by one, right? You got to build up that net worth. But after a while, you talk to a lot of accredited investors, they would all agree that you want to get out of the direct ownership of rental properties and into a passive role, because what you really want to be in is like, dozens of passive positions that you don't actively manage, but you're super diversified, maybe, and no one placement more than half or 5% of your net worth, approximately.
That makes sense. And as you're thinking about being a passive investor, you are thinking about generating income every single, I guess, quarter. So you get distributions and you also get equity in the deal. Now, when you sell, is the goal like the exit strategy to sell within 5 years because it's appreciated in value? You fix it up, got more tenants in there, the value's more. Is that the end goal, or is the end goal long-term holding?
It's both. It's kind of like, if the pitch is on the middle of the plate, you pull it to left field. If it's outside, you take it to right field, right? In the beginning, we would buy a lot of these Class C, just crappy properties in rougher areas, and for those, we would probably pick a strategy where we do the business plan in 2 or 3 years, and we pump and dump, right? Sell it. But lately, we've been in a lot better areas, nicer assets, more B plus B assets. So those line up to more like, once we implement the business plan, refinance in year 2 or 3. And the beauty of that is it's tax free, because the refinance is kind of like pulling money out of your home equity via HELOC in a way. So, investors are able to get their money out and go into another deal while still retaining their equity, and then going, and at that point, this is what people coin the term infinite returns, right? Because they're in there with no other original money. It's house money at that point, and they just kind of grow their money for a long, long time. In commercial real estate, in anything more than a 7-10 year hold is a really, really long time to hold on to an asset. But, once you've kind of pulled out your original capital, that's all gravy at that point.
Yeah, I love that. I love that aspect of being able to recycle your money over and over again, and just let the value of the house or the property do the work for you. Now, if somebody wants to be a general partner, because most likely people they're not gonna be able to just have $100,000. Really quick question: how much is the minimum that somebody would need to normally invest in a syndication like this?
Yeah, I mean, normally like 50 grand, 100 grand is usually the minimums. I mean, the institutional operators, guys who have been along a really long time, that have higher splits, higher fees. You may or may not want to invest with them. They're typically taking 100 to 250,000 minimums. These are more the Wall Street firms. But of course, there are newbies, right, that are desperate that we're going to start to talk about, getting into the business. And those guys would be, they're desperate to take like 25 grand or 10 grand. But to me, I wouldn't invest in those type of people, right? Like I only want to go with proven operators that have been doing this a while. But so,
Yeah, I get that.
the range is all over the place, right? This is the nature of private placements. It's kind of a wild, wild west. There's no real rule. There's no website for this stuff. There are crowdfunding websites, but those guys just, they're gun for hire. They raise capital for the operator, and that makes me really question like how good the deal the operator is. If the operator has to pay money to raise capital, they don't have a confident investor group to fund the deals themselves.
That's a great point. And I know that as an investor myself, when I'm just giving money out as a passive investing, my first worry is losing my money. I don't want to lose money. So making sure I don't lose money is my number one priority. The second priority is making money on my money. Those are the two top things. And so as I'm teaching any of my students on how investing in real estate, getting private money, you need to make sure that your investors are comfortable with those two things, not losing money and then also making money on top of that. Now, if somebody wants to, they're like, they don't have enough money. They don't have $50,000 or even $100,000 or $200,000 to get started, but they want to do syndication. I've heard syndication or buying apartment complexes and getting people's money together. I've heard like you absolutely can just jump right into that. There are some other people that teach how to do syndications. They say just skip over the single family, just play Monopoly, but skip over that part, get right to the apartment complexes. What are your thoughts about somebody who maybe has 2 or 3 rentals and they're like, you know what, I want to just jump right into apartment complexes. How do we get started? Or is that even a possibility?
Yeah, I mean, I'll be honest, guys, like that ain't gonna happen. Like I mean, these guys love to tell you and pump you up with all this confidence, but stuff ain't gonna happen. I mean, I see what happens in these big pro guru programs. Really only like 1 to 3% of people like hit success. The rest just wasted, what is it, 20, 30, 40, $50,000. Um, if you're already to a point where like to follow my journey, when I had rentals, I was kind of, going through these programs to educate myself, to analyze deals, do it the right way. And at one point I was like, well, my net worth is already pretty much to $1 million. And I was only in my like late 20s. And I was like, well, if I already know what deals to go in as passive, why the heck would I want to get involved on the general partner side and take on all the legal issues, all the debt goes in my name? If I can just grow my money at like 15% as a passive conservatively, why the heck would I not want to do that, right? So it comes down to your goals. Like all I wanted to do was like retire or quit my day job before I was like 35. And that happened. But like, that was my goal. So I was like, well, why do I need to kind of take this extra risk to be a general partner? Of course, I'm kind of like, I eventually did become a general partner because I kind of have this education platform and people at the end of the day just trusted me. And I was like, well, if I'm going into this deal as a passive, I mean, here's what I look at the deal and kind of start to teach it. But, for somebody coming at it cold who doesn't have an audience, I mean, it ain't going to happen, guys. I mean, unless you're willing to pay for that admission fee that's like 20, 30, 40, 50 grand and just expect that you only have a maybe 3% chance of hitting success. If not, just figure out what your highest and best use is. And for a lot of my clients, it's just like working your day job, maybe picking an easier job, relaxing a little bit more, and just following that path out. Maybe it doesn't take you 2 years to quit your day job. Maybe it takes you 4 or 5. So be it, right? But at least you get there certain.
Every time I hear somebody say, yeah, you could jump right in syndication without any experience, I'm like, that just doesn't sound right to me. I mean, I have 30 plus properties, single family homes of my own, have had duplexes and everything like that. But thinking about getting into apartment complexes, you need a network of people that are going to be able to lend you money. Like not everybody has a lot of money just put down a down payment, like $500,000 to put down payment on a property. And so I'm right there with you. I think along the same exact lines. That's why I personally start with single family homes, and I teach everybody, start with a single family home. Get experience, number one, but then also start making money and then start getting networked, start talking to more people. And with Master Passive Income and Successful Unemployed, I have so many people that want to lend me money just because of the platform, because they understand that I know what I'm doing. I'm not going to be some charlatan that's actually, doesn't know what he's doing. And so I get people all the time saying, hey, can I invest through you? And so we talk about that. But anyways, I completely understand what you're saying. Now, once you get to the point, because you got to 11 properties and you got a network, you're starting to find some private money people. What would be the first step to jumping into syndication? Like, you have some experience, you have already a network of people around you that want to lend you money. What would be the first thing that we would need to do?
See, like, I mean, I think that's a misnomer too, right? A lot of people think like you kind of build up, and it is important having that past experience. Kind of just, if anything, it's just project management skills, right? You kind of know how to push projects forward. But when you step into the commercial realm, a lot of it that's not carryover, especially like the networks and the people are completely different. It's very like being the cool kid in high school helps you not nothing in college, right? It's a total reboot. Three main things that like I think people need to realize the reason why it's such a big reboot is like brokers control deals, right? You're not gonna send a stupid letter to an apartment owner who has an LLC to sell your property like you are some idiot has a $40,000 house that's willing to sell it to 50 cents on the dollar, right? That's not gonna happen. Brokers control good deals, right? If it's a crappy deal, you don't want it anyway. It's a headache with a lot of hair on it. Yeah, maybe you might find it via yellow letter, but we buy stabilized properties that are already working, already cash flowing, that has a little bit of like manager or owner like distress. Those are controlled by brokers. And brokers' number one concern is can this dude close the deal, right? So if you've never closed 100, 200 unit properties in the past, you're not going to get a shot. Number two, these guys aren't going to give you a shot if you don't even come visit the property. That's for sure, because they want what assurance to close. So all you guys out in California, like East Coast, trying to buy a property in Texas or whatever, everybody just jokes and laughs that you're just an unsophisticated, like amateur out of state that probably can't close, and you're just not going to get the chance, right? Not to get a chance at the good deals, right? You can probably buy 99% of the sucker deals out there, but the good deals, you're not going to get a shot at that stuff. And thirdly, like when you want to get a loan for these things, Fannie Mae and Freddie Mac is not going to give you a loan unless you have somebody on your partnership team that has general partner key principal experience on 100 to 300 unit property. So it's a chicken and the egg thing. I got lucky because people brought me in for the goodness of their heart to give me that KP experience, the key principal experience with a Fannie or Freddie loan. But if you're just a guy off the street, you're just not getting in. It's an incredibly unfair game.
I completely understand you because you're right. It's not like you could just go to any realtor and, well, you can with a single family home. Just go to any realtor and they'll help you buy the house. It's super super simple to do that. But going to buy even a 50 unit apartment complex, they want to make sure, the realtors want to make sure, the brokers, they want to make sure that you can close on the deal just like you said. That's why I suggest starting with single family homes, start working your way up, then go to 3 units, 4 units, then probably get a 10 unit, just start working your way up. Because if you want to jump into a 200 unit apartment complex, that's going to be like, that's almost like winning the lottery. It's going to be really really hard unless, like you said, you would literally have somebody who's done many deals before as a partner with you that's coming on the deal just because they're bringing all that experience. Because I've gotten plenty of commercial loans before. The commercial loans, they say, well, what experience do you have actually managing properties? Like, if you don't have any experience, they're not going to lend you money for that. Now, buying a house, a single family home, yeah, of course they're going to do that. They do that all day. But when it comes to actually commercial loans, totally different story. So, is there anything that we should take away from this idea of investing our money into bigger scale properties? Like, is there anything that we need to know, or is there any like concerns that we should have?
Yeah, I mean, like anybody can like say, "Hey, I'm gonna double your money in 5 years," right? Like what I kind of teach my students, the LP passive investors, is like, all right, well, as we all know, there's a spreadsheet, right? Like you can fudge whatever of these 4 or 5 KPIs in the spreadsheet to get whatever you want at the bottom of the page to go on the pro forma sheet, right? So we kind of teach students. I have an e-course for this that says like, here are the big things to look at. Like, what are the reversion cap rate assumptions? What is the assumed full occupancy? Is there economic vacancy assumed? What is the rent increase escalators assumed every year, right? We better not assume the thing to go up 3, 4% every single year in terms of rents, right? Like that's just a surefire way of knowing that your operator's not being conservative. But this is a people game, right? And I always teach like numbers first, just to save your time, so you don't talk to all these bozos out there. But you got to parlay that into like building relationships with other pure passive investors, because that's where you're really going to find the people to work with. When I first started doing this stuff, I mean, I lost my money with a shyster. Uh, why? Because I just didn't have the network at the time, and none of us have network, of other pure passive accredited investors investing 50 grand in all these deals. It's going to take a while. You're going to have to kiss a few frogs. But that's kind of why I always tell people, build a network of pure passive investors around you, right? And as you can see, this is a huge reboot. You're not talking to like brokers, property managers, all these guys in single family home residential world anymore. It's kind of you're smoozing with passive investors, kind of carefully navigating all these large private placements and syndications is kind of the game.
I'm actually thinking that if somebody were to be, if they had $50,000 that they wanted to invest, a good option, especially if they don't want to do anything, like if you're a doctor or literally you just want to spend your time doing something else as opposed to working, you just literally give it to somebody else that's, and I would say personally outside of the stock market, the mutual funds, like you're going to make such a low return as opposed to investing in apartment complexes. I mean, it's so much better. Now, Lane, let's jump into the rapid fire round. So this rapid fire round, questions are short, but their answers don't have to be. You can make them longer if you want. So, what is one bit of advice that you would give anybody that is looking to just be an investor in general? Not say syndication or anything, but any insights that you've learned that we can learn as we have become or are trying to become an investor?
Yeah, I mean, just do it, right? The first deals that you're going to buy on your own aren't going to be very good. I mean, I bought turnkey rentals when I first started, but the important thing is getting in the game, increasing your intelligence to parlay that into increasing your network with other pure passive investors. Your network is your net worth. When I became more of an accredited investor, started investing in private placements and syndications, I quickly realized that that was only 1/3 of the world. 2/3 of it is all these legal practices that the wealthy play, infinite banking, and then all the taxes stuff that changes every couple of years. I mean, I don't pay any taxes because all my passive losses from all these large syndication deals whack out all my income. That's how the wealthy do it. That's how you're supposed to do it. That's why we pick real estate as the one vehicle, because just for some reason, real estate gets all these good tax advantages. So that's the holistic way that the wealthy people do it. Buying buying and selling rental properties here, there's just kind of gets you into the game, I think. But I think it's important to kind of follow this and kind of get into this more of a credit investing mindset and world after you grow your net worth. But if you're a guy under $100,000, $250,000 net worth, just go buy rental properties. I mean, that's what I did from 2009 to 2015. I graduated college with an engineering degree, didn't like my job, and I just put my head down and just saved my money, right? Like I didn't, I realized my job was my highest and best use for my time. And I think everybody needs to go through that exercise, right? You may be doing a side job, but if you have a day job that you make more than 50, 60 grand a year, I mean, that might be your best, your ticket out of the rat race right there. But to parlay that into passive real estate investing, which quite honestly, everybody can do. Most people can't make a successful business, but pretty much anybody can do passive real estate investing.
That's a good point. Okay, next question. What is one bit of advice you would give your younger self that you've learned, obviously, and you're applying it today? But some advice, it could be, I don't know, you're in high school, college, whatever, but just a bit of advice that you would like to know or have your younger self know.
Yeah, I'm not a big fan of college and education. I mean, I think that trains you to be a cog in the system. And like today we employ engineers and architects on our deals, but they don't own any equity. We just pay them their little stupid 50 or 100 grand per year type of salary, and we take all the spoils along with investors, right? It's a shame that like the whole system is engineered to create all these really smart professionals that are high performing, yet the money doesn't come to them, right? You're just a cog in the system. And like that was something that I realized very quickly when we started to do these larger deals is, it's like, is college education really worth it? Like, well, this is where I'm conflicted, right? Because that college got me the good engineering job, which, made me able to save $30,000 to $60,000 a year, and which I plowed into real estate investing to get off the ground. So that if it weren't for the engineering job, I wouldn't have money to invest. But I mean, in the beginning when I quit my day job, there was a little bit of identity crisis, right? Because you go through life, all this school, becoming a doctor, dentist, engineer, lawyer, but then you kind of throw it all away.
I could see that. There's definitely a reason why the engineers or contractors or anybody why they're paid less. It's because they have so much less risk involved. Getting a job, there's no risk in getting a job. You just get fired and find a new one, or you quit and get a new one. Putting your money out, buying a property, that is a lot of risk. That's why the people who start the businesses, that's why they make the most money, is because they put out so much risk. Where there's risk, there's reward. Okay, so next question. What is one nonfiction book that you would recommend that we should read? That could be about business, life, whatever.
I'm not a big fan of reading books. I think people read too many books. I mean, if it's real estate investing, go to Billionaire Real Estate Investor by Gary Keller. But I mean, spend the time analyzing properties and talking to people, getting on the phone, networking. I think that's where you really should be spending the time. I follow this principle of the 70-20-10 rule, where 10% of the learning is academics, right? The books, the podcasts. 20% is chit-chatting with other peers and mentors. And then the 70% is going out there and doing it, messing up and improving.
I would absolutely agree with that. I know I got asked one question one time from when I was getting interviewed on a podcast. They said, well, if you had $1,000, you had to start over from scratch. What would you do? I said, well, $1,000 would be great, but I wouldn't even worry about that. The first thing I would do is I'd be talking to people. I'd be networking. Just like you said, your net work or your net worth is your network. Like how big your network is, that's how big you're going to be. So I completely agree. Okay, so what is one tool? It could be an app. It even could be a piece of paper and pencil that take notes on. But what's one thing that you use on an everyday basis that we should look into using?
I mean, I pretty much use the same stuff like Google Docs. Everybody else does. We use Asana a lot on my teams. Instead of sending an email to somebody and them like ghosting you on doing it, like Asana kind of keeps people accountable. You can have a discussion on what the individual project is. You can pass it along the team. Even if you don't have a team, like you can kind of keep yourself accountable via that project management software. I used to be really good at like keeping inbox zero, so I would used to use my inbox, but you don't get all like the adding additional notes with that method.
That's great. Yeah, I use that too. No, all right. Lane, you've given us so much great advice and insights. I know somebody's going to want to reach out to you and see what you're doing, maybe even invest with you. So how can they find you online?
Yeah, I mean, if you guys are podcast listeners, check out my podcast, Simple Passive Cash Flow Passive Investing. Started the podcast back in 2016 as a way to kind of teach people how to buy single family home rentals. But as I became more of a credit investor, obviously the tune has kind of changed to more tax advice, legal advice, and how to invest in larger deals and act more like a credit investor. But check out my website, simplepassivecashflow.com. If you're a newer investor, net worth under $250,000, go buy a rental properties. Simplepassivecashflow.com/turnkey is kind of my guide there. But if you're interested in learning more about syndications, go to simplepassivecashflow.com/syndication. That's kind of my guide there. And then email address is lane@simplepassivecashflow.com.
Great. Lane, thank you so much for being on the Successfully Unemployed show. I appreciate you, man.